lot has changed in humanity since our June 6th income ETF power rankings. We had two old men shout at each other in front of millions of people. We had the Haktua girl who has inspired millions of couples in the bedroom. We've had Nepo babies continue to show us that they are taking over the world, unfortunately. But one thing that remained consistent, though, during this time period is the juicy dividends from income ETFs. Now, income ETFs, they are a powerful tool in one's portfolio that could give passive income streams and diversification. Now, I'll be ranking the top income ETFs again for this month. Now, let's go over some of the criteria that I use to rank these income ETFs. So first off, they need to maintain that NAV. Now, there's a word that people don't want me to say. They will pretend it doesn't exist, that it's mythology. Now, that word is NAV erosion. Guys, what good is dividends if it's just your own money returned to you? That's why you need to look at a chart and make sure that the NAV is at least staying the same, or better yet, going up. That's why I also look at price appreciation. Now, of course, with income ETFs, price appreciation is not the most important thing, but I do like to see a little bit. That's a really nice plus. But if it remains the same, that's also pretty decent. And then, of course, the real reason you invest in these income ETFs is to get those sweet dividends. Those dividends that continue to cash flow, bring you money every single month. That's the whole purpose of income investing here. So I take all those into account, look at the ETF's history, how long they've been paying dividends for, what their inception date is, their performance. And then I'm also going to be putting some emphasis on how they've done since June 6th. That was the last time I did an income ETF power rankings. Ever since that period, let's see how these ETFs have done. And of course, I'm also taking into account subscriber engagement. So I don't have time to research and look at every single ETF out there. That's why I really appreciate when people put in the comments what ETFs they like, because there's a lot that I can learn, that we could all learn from the comments, and it really helps narrow down some of these choices. And that's why as a community, we're all kind of learning from each other. And of course, I'm going to be putting investing combos. So, don't expect JEPI as like number 5 and then JEPQ as number 4. If it's from the same company, I'll just lump them together as one combo, because people often own both. They're not just owning one income ETF. All right, so without further ado, let's get into our income ETF power rankings. So honorable mention here goes to Roundhill. They just missed out on the list. So they have XDTE and QDTE. Now, these are zero-day options on the S&P 500 and the NASDAQ 100. So they are generating income each morning by selling out of the money calls on the index. It's also a pretty unique way that they actually pay out their dividends. They actually pay them out every single week as opposed to every single month or every single quarter. While this is definitely unique, just know there is going to be a little bit of a trade-off here. A lot of people might like that they get paid weekly and that the cash flow comes in a little bit quicker. Just know that there is going to be an administrative cost to do this as well. And that's probably why the expense ratio is higher than what we typically see at 95 basis points. So far the NAV has held up pretty well. I like to see how they do during different market conditions. Right now, the stock market has really been only up since March, and the stock market has just done so well in 2024. But I'm not going to lie, potentially getting a 26 to 40% yield is very attractive. I'll probably make a separate video going more in depth on these two ETFs as people keep asking for them. Number 7, YieldMax, YMAX, Coney, and YMAG. All right. People keep calling me a YieldMax hater. But I don't know, I think I'm more like a person that just doesn't like to lose money. But I cannot deny that YieldMax or YMAX has performed very well since their inception in January. They're generally maintaining that NAV. At one point, they were actually beating the overall market, which is super impressive. and they are offering a pretty strong yield around 43%. Now, YieldMax owns a bunch of different income ETFs that are within the whole YieldMax universe, and then they practice that synthetic strategy. Another one of YieldMax's most popular funds is Coney. This is a single stock strategy on Coinbase that I get a lot of people. They told me in my last video that this is a super uber awesome ETF that I need to look into. And while that 99% distribution rate, I'm sure that doesn't throw any red flags out there. And that sure does look impressive and it looks cool on their website. But you have to know a 99% distribution rate, it has to come with some risk. Since I last made this video, Coney is down 16%. You see, that's the risk you take when investing in very volatile companies like Coinbase. Premiums may be great, but you have to know why they're so juicy. The price can quickly go up or down in a small amount of time. Let's take a look at some funny comments I got in my last video. I really want to thank Golden Forge 12 for calling me a clown show for not including YieldMax because of my bias. Well guys, newsflash, this entire list will be biased because, I don't know, it's my opinion, it's my video. Of course it's going to be biased. I also appreciate Stock Dog in the Philippines, man, what a great name, saying, I have a fear of learning. Yeah, man, the fear of learning. It's only caused me to outperform the market in the past 3 years, something only the top 1% of investors can do. All right, that was a great break. Let's get back into these power rankings. So I also have YMAG in here, which is the magnificent 7 stocks that YieldMax puts out. And this has been out since February, and they're actually up 5% since their inception, and it gives a pretty solid 40% yield for now. So once these funds continue to prove that they can do well over a long period of time with no NAV erosion, and they behave well in different market conditions, right? The stock market has only really been going up. I could consider ranking them higher. They are a little bit too much high risk, high reward for my liking, but that doesn't mean that they can't be profitable for you. Remember, when conditions are very optimal, they can make a lot of people a lot of money, and the high implied volatility with a lot of these stocks, such as Coinbase, that's what provides the juice for those dividends. Number 6, Simplify, SVolve. SVolve will go down 1 spot in my power rankings. They were up 57 basis points in the last month, which isn't too bad, but it actually wasn't as good of a performance as the other income ETFs on this list, as we're going to find out. Now, SVolve has a unique strategy where they are shorting market volatility with the VIX, and then they sell VIX futures contracts. Now, unlike others, you are going to see on this list, they don't just do the very basic sell covered calls on an index. It's actually a very unique type of asset that isn't tied to other assets like equities, commodities, or bonds, but rather volatility of the overall market. Now, SVolve recently got a 5-star rating from Morningstar, which is a super impressive accomplishment. That is not easy to do. Now, SVolve is super consistent. They keep paying a 30-cent dividend, and that NAV has gone absolutely nowhere in the last 2 years, which is perfect to me because that's what I want to see when they have a nice, juicy 16% dividend yield. I will gladly take that. Number 5. ProShares, I SPY, IQQQ. All right, this is a brand spanking new ETF that I've never really covered on this channel, despite having so many great people in my Discord telling me all about it. We're having so many great conversations in the Discord. People are constantly learning about the best investments, so be sure to join us in the link below. So, these 2 ETFs, they are run by ProShares. They're doing a daily covered call strategy on the S&P 500 and the NASDAQ 100. Now, they say this might actually be a chance to get higher returns than the monthly covered call strategy because they're sacrificing some of those potential gains by doing the monthly versus daily. Now, this is why I love having so many different income ETFs to choose from, because each one is doing a slightly different strategy. So even if on the surface they all sound the same, each one is actually doing something a little bit different. Now, they don't actually trade options, but they gain exposure to the sale of daily call options using swap agreements. Now, iSpy came out in December of 2023, so it's not that old, but they are up 10% so far. iQQQ came out in March and has been up 7% so far, and we don't need to use the dreaded NAV erosion word with these two ETFs. Now, their expense ratio of 55 basis points actually isn't too bad either, considering these are actively managed and have been performing quite well. It takes money sometimes to make money. What's interesting to me is that iSpy actually has a higher projected annualized yield of 12.4% compared to iQQQ, which is about 10%. Of course, these are just estimates. Expect a full depth video on these two soon. Number 4, Neos, SpyEye, QQQI. I like how they're not even trying to be creative with these fun names. Like, they're just giving us whatever index they're tracking and then placing an I at either the beginning or the end. But regardless, this profitable duo has showed us in the last month why they're number 4. They were number 4 last month as well. This is another great month for these Neos products. SpyEye was up 2.18%, QQQI was up 3%. For comparison, guys, during that same time span, the S&P 500 was up 4.74%, and the QQQs, or the NASDAQ, was up a good old 6.9%. Now, some even better news. QQQI has paid their highest dividend in their short history at 62 cents this past month. SpyEye also set a new personal record at 51 cents. It's always good when you are setting new records in dividends paid out and that NAV is going up. That's a sign of a good income ETF. Number 3, JEPQ. JEPI's dividends have constantly been going down. They're cracking around that 33 cent mark now, but it was pretty common for them back in the day. By back in the day, I'm talking about a whole 2 to 3 years ago, for these to be well into the high 50 cent ranges. This is just the sword that income ETF investors have to live with, that dividends are quite variable, especially one that owns 20% of their holdings in equity-linked notes. Just know that income is always going to be dependent on other factors such as volatility, interest rates, option premiums. But honestly, JEPI's NAV has held up quite well. Last time I checked, a 7% yield is also pretty solid. JEPQ, on the other hand, is up 15% in the last year, and their dividends have been quite steady as well, in the low 40 cent range. JEPI and JEPQ have a mind-boggling $48 billion in assets under management between the two of them. Clearly, income ETF investing is taking off, because I used to make videos when these were both in the hundreds of millions of dollars. Number 2, Goldman Sachs, GPIQ, GPIX. Okay, this was our number 1 last month. But some of you guys didn't like it. Some of you felt the ETF was just too fresh. It only came out last October. Some feel the 8% yield for GPIX and the 10% yield for GPIQ, they felt that was way too small to be deserving of the number 1 spot. But guys, these funds are giving insane capital appreciation. GPIQ is up 26%, while giving nearly a 10% yield since inception. Are you kidding me? That's unheard of for income ETFs. GPIX, or GPIX, is up 23% since their inception. This is so impressive. Do you guys notice how funds like GPIX actually go up as the market goes up? It doesn't just go down and down and down. We don't need to pretend that NAV erosion doesn't happen here like we do with so many of these high yielding income ETFs. And it also has a super low expense ratio of just 29 basis points because it's managed by the ultra wealthy Goldman Sachs. I mean, I know we might have to test our morals by giving our money to them, but if they're going to be offering these amazing returns, man, it's a little easy to be corrupt sometimes. So in the past month since I made this last update video, GPIX is up 2.99%, and then GPIQ is up 3.89%. Number 1, YieldMax, Tesla crash. Man, look no further than this dynamic duo. You're losing money on both ends. Number 1, RexShares, FEPI, AI Pi. The cat's kind of out of the bag on how great FEPI is. You're getting exposure to big tech and covered calls, and you're getting a super juicy 25% annual yield so far with no NAV erosion. FEPI is up 9% since inception, and we cannot really ask for a better income ETF than FEPI. FEPI was up another 2.6% this last month, and if you ever wanted or dreamt of another RexShares product to come out, well, those dreams are coming true because they just delivered with a brand new income ETF, AI Pi, which is already up 6.53% since their inception on June 7th. AI Pi will focus on artificial intelligence companies and then do covered calls on them. So this is a chance to get AI exposure, which many people think that we are in an AI bubble, but at the same time, many people also think we are still in the very early innings of AI. Both might be true, and honestly, I have a feeling there's still a lot of money to be made with AI. Now, we're still waiting to see how big AI Pi's dividends will be. They still haven't paid out their first dividend, but certainly I will be making a video when that happens. We will definitely check in on how big and how fat that dividend. I want to shout out Adrian, my newest Collect Cash Patreon member, who now gets access to my full $200,000 plus portfolio and all my weekly stock alert posts that I write. Guys, these videos, they do take a lot of time and research to put together, so be sure to show some love by hitting that like button. If you're listening to this in podcast form under the Collect Cash podcast name, it really helps me out, and I'd love to hear what you guys think of these power rankings in the comments below. If you thought I'm missing an ETF, or if you would have ranked some higher or lower, I want to hear it because that will definitely influence me for the next month. Have a great day and keep earning.